What's hot in the global economy? Well, follow the money. It is usually a reliable indicator of the shifts in business trends. And no, we're not talking about hot money flows, which can be in one day and out the next. It's foreign movements of direct investment in physical buildings and equipment, the longer-term commitment sort of investment that is the signal here. So what is it telling us about the tables that companies are putting their hard-earned cash on? The World Investment Report produced by UNCTAD every summer is the authoritative source of this global direct investment data. It was released about a month ago and details investment flows and stocks the world over. The latest report covers investment activity in 2013, and the key finding is that the downturn of 2012 was reversed last year. Thankfully, investment inflows were up by a sturdy 9% to 1.45 trillion US dollars. Ready cash doesn't seem to be a problem, but the willingness of businesses to part with it is what changed last year. Investment reticence has been a hallmark of the post-crisis era, so last year's positive movement is heartening. But there's a lot more. Key observations in the data point to nascent global trends. What are the high points? The first is not really new, but worthy of restating. Global investment is shifting to emerging markets. Developing economies attracted 54% of global inflows in 2013, in spite of mediocre growth and increased worry about near-term prospects. It suggests that long-term money still sees the higher growth potential of these markets, in spite of the near and even long-term risks they face. Well, the second point is related, but it's a newer development and one we believe will continue to increase in importance. Emerging markets are increasing their outward investments. At the beginning of this century, outflows from emerging markets accounted for only 12% of global foreign direct investment. It's now a whopping 39% and growing, reaching $553 billion last year. This trend is likely to continue. Let's face it, these markets aren't getting any less resource hungry and are showing a sustained appetite for those resource investments. They are also deepening their global supply chains. Moreover, as they continue to incubate transnational corporations of their own, emerging markets are more likely to invest abroad to increase market access. An even newer element is budding. With key markets like China bumping into labor constraints, expect greater emerging market investment outflows in search of the world's available workers. Perhaps this is motivating a third key trend. Investment that is headed for the poorest countries is much less focused on the extractive industries. In 2013, 90% of greenfield inflows were in the manufacturing and service sectors, a development that is not likely just a one-year wonder. Here's another trend that's gathering momentum. State-owned enterprises are disproportionately high foreign investors. The report shows that in 2013, SOEs accounted for 11% of global FDI flows, while they only account for 1% of the world's transnational corporations. With the rise of SOEs in the past 2 decades and the relative paucity of investors in the post-crisis period, the doors have opened for these entities to participate more. As the coming growth cycle is expected to experience localized cash constraints, we can expect that SOEs will remain prominent in the foreign investment arena. There's a lot more information in the report, but these highlights point to the shape that investment is likely to take in the coming years. The report indicated that investment is likely to see a run of growth over the near term, suggesting that investors are shaking off their post-crisis stodginess. That's hardly a surprise, as it's typical of this point in the business cycle, but it sure is good and long-awaited news. The bottom line, as global investment ramps up, it's important to keep our eyes on 2 basic elements. First, Where are the most likely sources for global funds for domestic projects here in Canada? Second, where are the hot external markets that money is flowing to? These are likely the next markets to see high growth, and Canadian foreign investors may well want to ride the tide. Until next week, I'm Peter Hall.